studio today. Hexaware, their IPO opens for subscription. The price band has been set at 674 to 708 rupees. It's a pure offer for sale for 8,750 crore. And the selling shareholder is the promoter, the Carlyle Group. We have with us, with the top management, Srikrishna Keech, we call him all, Srikrishna Ramakarthikeyan, CEO, and Vikash Kumar Jain, the CFO of the company, joining us here in the studio. Thank you very much for joining in. So while walking into the studio in the morning, I was thinking this is not the best of times to, come out with a public, IPO right now. But have you seen investor demand dwindle to some extent when you've done your road shows, especially the retail shareholders, considering the bloodbath that we're seeing on the Lal Street right now? Has that to some extent dented the appetite which would have been there otherwise?
So, good to see you again, Reema. I'll say three things. Okay. First, the fundamentals of our business don't change with what happens in a few trading sessions. Okay. Second, I think kind of in a bad market, it takes good companies to feel completely confident about going public. And I think investors should take confidence from that. In a bad market, people may make more money long term than ever. Third, I think most importantly, not only have our fundamentals not changed, I think some of the fundamentals behind the market in India going down are actually tailwinds for us. If you think of one of the most important ones, rupee depreciating and FIIs hence seeing lower returns, actually for us, rupee depreciation is a solid profitability tailwind because our revenues are in rupees and dollars and pounds and our costs, a lot of them are in rupees. So it's actually a big tailwind for us.
Okay. So the other question is, especially this is at a time when quite a lot of your peers are actually calling for a recovery as far as the BFSI space is concerned. You have significant exposure there. So how's the outlook looking for you? What kind of order wins are you seeing? Is it short cycle orders, longer cycle orders? Give us a sense of the order.
Will do. I just want to add one more thing to the prior question, if you could. Right?
Sure.
We have 53 of the largest funds in the world as anchor investors from 96 different lines, 9 out of top 10 mutual funds in India, 3 of the most active sovereign wealth funds, and all the big global FIIs you can think of, Capital, Fidelity, Goldman, JPM, T. Rowe Price are all in our anchor book. Back to your question, Rick. We've already seen a recovery in financial services, especially in the US. And if you think of some of the directions which are very sure of the new administration, lower regulation, certainly not increasing taxes, right? More appetite for M&A and IPOs. All of these are significant tailwinds for the financial services sector. And I think, it's already seen improvement, and I think it'll do even better.
Vikash, let's come in on the margins then. As Keech was pointing out, the rupee depreciation is a big tailwind. Now, your 9-month EBITDA margins on an adjusted basis were 17.4%. And in our last conversation, you said these are baseline margins. But since then, since the time we have these numbers reported, we've seen a big rupee depreciation. Would you like to raise your baseline margin estimate going forward purely on account of this tailwind?
I think it's a combination of few things. Number one, last time also we spoke about, I did mention that these are the baseline margins. There are two aspects to it. One, which is completely within the control of the company, which are the operational aspects. So we are working in terms of improving our utilization, offshore mix, how we expand our presence in tier 2 locations, which will bring down the cost of delivery. That should aid margins. And then the operating leverage, which comes with scale and growth. The second aspect is with respect to external factors like exchange rate, foreign currency fluctuations. They definitely aid from a margin perspective. Given the fact that there are certain restrictions in terms of giving me outlook per se, I think after our first quarter results.
So say a 1% average depreciation quarter on quarter, given your hedge position, etc., would benefit your margins to what extent?
Close to 40 bips.
40 bips, all things equal.
Yeah.
So 40 bips improvement in margins for every rupee depreciation.
Yeah, but I would call out this that from a long-term perspective, a lot of those, because there is a pricing, the clients also know about it. So a lot of the players basically come and it averages out, and which is basically in the short term it comes back. Some of it also goes back to the client. The other aspect, what it does is the way to think about it from a long-term perspective is rupee always or dollar appreciates. So rupee basically depreciates. A part of that goes in terms of funding the salary increases. The merit increases are significantly higher than the price increases what we get from the clients. Anything else put together. So
one
a
word
part
also,
of that
the margins, especially since we're talking about that. As far as the DRHP is concerned, last year quite a few one-offs were there. Are most of them already priced in? Now going forward, what is the baseline margin? If you could give us.
So as I said, most of them were truly one-timer in nature. One of them, which will continue until say first half of this year, is with respect to a ERP implementation that we are doing. But other than that, everything else was truly one-timers, and they are not expected to continue.
Sukich, talking about growth, you've always maintained that your aspiration, and you've proved it in the past, is to continue to grow above industry growth averages. Tell us a little bit more about growth. What shareholders, there are a lot of new investors who've come into the market in the last 3 years, and they don't know the Hexaware of prior to 2020. So tell them what they should expect from the company in terms of growth.
Sure. I just want to clarify, it's not just growing higher than industry average. I'll say our history is to grow materially higher, 2, 3 times, sometimes more than 3 times industry average. And I think that is certainly our ambition. Our ambition is to do that relative to industry. Our ambition is also to be in the best, the top in the growth in our sector.
So this year you will be 2x that of the industry, or will it be 3x? And what about FY26 in terms of pure fundamental growth, headwinds and tailwinds as you see it?
Yeah, I think the most important tailwinds are the policies of the US administration, which I spoke about earlier.
Right.
Lesser threat of increasing taxes, or no threat of increasing taxes, substantially lower, regulation, just ease of doing business, right? I think that, is already, you've seen it already in a number of types of institutions' results, right? You were asking earlier about financial services. You look at the stock prices of the financial sector in the US. That's a pretty good indicator of where the market is going.
So what are budgets like?
See, I think what customers have got to is not deciding the budget for the year, but do it more on a quarterly basis. I will certainly say right now, nobody's thinking of a lower budget this year than last year.
Earlier, you had highlighted some softness as far as the manufacturing and consumer verticals are concerned. Will that continue into the first half going forward? And what percentage of your total revenue pie is that particular segment? When do you see a recovery there?
16% of our revenue approximately comes from manufacturing and consumer. Right now, the way we see it is there's a softness. I mean, 6 months back, the outlook might change. There could be a spending which is going to come back. A lot depends upon in terms of what the interest rates happen from a global perspective. But right now, in the immediate future, we see that there is going to be a bit of a softness which will continue.
In the interview, you had also spoken about how 60% or 62% of your revenue come from clients who have $5 billion plus in terms of a revenue run rate. What was that number, say, 3 years ago? How have you managed to mine these large clients? And what is the significance? Is it that your revenues are more sticky, or is it because they're large clients and therefore they have more budgets to spend and therefore that aids your growth?
So I think let me start with the significance. It is exactly what he said. The clients have larger budgets. And once we do a good job with them, which we do, then our ability to grow with them consistently over a long period of time is very good. Okay. I don't recall the exact number 3 years ago, but it has gone up.
It's gone up. Okay. And just one quick word then on Carlyle. Right? We've spoken about this in the past, that it's a PE holder, a PE promoter. They will sell stake in the company. How do you envisage that stake sale to plan out now that you're a public company?
I don't think they have a timetable. The funds have several years of life left. But you're right, they will sell, and I don't see that as something that people should be worried about. Our markets are so large, there's $3.5 billion of net new funds every month. I think that depth of market here is what gave us the confidence that even if Carlyle sells, it's not going to impact any shareholder.
So no planned timetable as far as further paring down of stake of Carlyle is concerned.
That is correct.
If you're done, Sharma?
Yeah.
Thank you so much, gentlemen, for
you.
joining us. Wish you all the best for the IPO, and we'll get you, once again, once the company lists onto the exchanges. Thank you once.
Thank you. Thank you very much for coming down to our studio.
Let's now slip into a short break. We'll get you more on the conversation with the Petroleum and Natural Gas Minister Hardeep Singh Puri on the other side.